what are the different ratios you got for the AFCON's financials? Yesterday we had spoken that we'll be taking out ratios for AFCON's financials. So anybody has done that? Anyone who has done that? And then there was a comparative analysis to be done and giving your overall observation. I think no one has done it. I can understand it was weekend, Saturday. Okay, so today we are going to discuss credit analysis, banker and analyst's perspective. So we'll slightly get into the details of mainly retail lending in this particular session. And I just wanted to know before that, anybody who is from the banking domain, who is into credit lending, be it in the credit side, be it in the sales side, but who is from lending side, anybody, you can put your name in the chat box. Anybody who is working with a bank or financial institution on the lending sphere. Okay. Praveen is credit risk analysis. Yashwant is loan consultant, Arthik, FinSav. Okay. Anybody else? Okay, Praveen is with Credit Suisse. Great. Okay, Shreya. Okay, you are from payment industry as credit and risk. Okay, great, great. Yeah, so in the payment system, there are a lot of risk involved. Payment gateway, there are a lot of risk involved, I guess, from the merchant side as well as from the customer side for the. Okay. Okay, guys, let's start. So the first thing is underwriting standards. So when we talk about underwriting standards, there are a lot of standardized definitions like guidelines set by lenders to determine how much debt may be issued to a person and under what terms. Now my point is, what if we do not set up an underwriting standards? Okay, Amit Kapoor is from investment management, specializing debt in investments. Okay, great, great, great. Okay, now the question is, what is the beauty of setting up an underwriting standards? What if we don't set up an underwriting standards? What is going to happen? So it can happen that for every case, we can just assume that this much has to be funded. I just wanted to know from you guys, what if we do not set up an underwriting standards and do underwriting on a case-to-case basis? Yeah, Abhijit, all the PDFs will be shared by Equalify. So for this, please get in touch with Equalify. It's not PDF actually, it is PPTs, and that will be shared or that will be uploaded in the portal. For this, please get in touch with Equalify. And also, this recorded video will also get uploaded in the portal. Probably we'll get it in some time. We'll be able to access it. So please get in touch with Equalify for that. Okay, now coming back to my question. What if I do not set an underwriting standards? What is going to happen if I do not set up an underwriting standard? My question especially goes to the people who are into credit risk. And what do I mean by underwriting standards? Screen is visible? My screen is visible. Okay. Yeah. So somebody has answered. Underwriting means background check on merchants, so there be various rules and checks. Okay. So fair enough. I understand your point. But when I talk about underwriting standards, so there could be 1,000 customers coming to me in a month, right? Yes, absolutely, Praveen. If standards are not set, then lending will be more assumption basis and individual discretion basis. Correct. So my question is, if suppose there are 1,000 customers coming to me every month, do I have 1,000 different standards or 1,000 different policies? Do I have? Yes. So that means at time I do a kind of clustering of policies, right? So these are the set of things. If this set of credentials match with this customer, he will fall into this cluster. And then I have a set of standardized norms for that particular cluster based on which I will be doing underwriting. Right. So for an example, if I'm a salaried person and coming for a credit card with X amount of salary, then what is going to happen to me is I belong to a particular cluster where being a salaried person with X amount of income, my CIBIL score has to be this much, my FIRE has to be this much. I'll discuss all these things. These are not jargons. So then only I will be fitting into that cluster and I will be either getting the funding else or I will not get the funding. That's it. So there are only, the outcome is binary, either 0 or 1. So either I'll get yes or I'll not get, right? That's why that is the purpose of creating an underwriting standards, right? Next is, okay, like in IB standards, a setup for financial institution versus hedge funds. Yes, sorry for discussing a bit from the detailing. No, that's okay. Absolutely. It's a good information sharing. That's okay. So the concepts are same. So the purpose when you talk about hedge, why do we hedge? We hedge just to combat or mitigate risk. That's okay. It's all about risk you are talking. It's fair enough. The purpose of hedging is to combat risk. That's it. So now, when we talk about purposes of underwriting, what do we mean? We mean tries to predict the reliability of a borrower or a customer. And when we talk about products and services requiring the underwriting process, credit such as credit card, mortgage, insurance, even insurance requires underwriting. Capital request as in financing for a business, renting property or furniture. Now, renting property or furniture also checks your CIBIL score. So if somebody has availed furniture from Rentomozo or from Furlenco, what they do, they take your credentials and they run your bureau score. Someone follows experience, someone follows CIBIL, someone follows CRIF event. Then they take your bureau score and then they run your bureau score and then they decide whether to give you furniture on rental or not. So rental or leasing, the concept is same. So this is a typical credit appraisal process, generic one. So receipt of application from the applicant and then receipt of documents like balance sheet, KYC, cash receipt, bank balance, stability proof. Well, I might get into slide details on certain documents. Now, when I talk about stability proof, What kind of stability proof generally is reliable and why do we need stability proof? It's a question. Why do we need stability proof and generally what kind of stability proof is needed? Guys, please open up because this is a totally interaction session. We are professionals. This is not a classroom training kind of thing. So it will be more knowledge sharing, especially those who are working in the credit and risk domain would like to, I'd like you guys to open up. No, stability proof I'm talking about, not income stability, Kamlesh. I'm talking about stability proof. Yes, that is one part. Income stability is a good point. I'm coming to that point. But when I'm talking about stability proof, what does it mean? Anyone else? No, I'm talking about stability proof. Yeah, so this is to some extent close, Abhijit, whether you are in, I'm in that particular business for a long time or for a short time. This is one thing is that whether I'm in that business or not. Now, stability proof could be my residence stability proof, my office stability proof. So what does it mean by residence stability not up to the mark? No, it's not overall financial stability. Yeah, that is definitely a portion. I'll come to it. But when I'm talking about stability proof, what does it mean? So when I am talking about my residence stability is not up to the mark, what does it mean? Residence stability is not up to the mark. What does it mean? Difficult to catch, that is one part. But what have I observed? What have I observed for not an approved property could be one thing that at any point of time, my government or any authority, they can come and evict me. That is one thing. But then what is meant by my stability proof? With the proofs I'm submitting, correct, Amit? Changing of house frequently. No, rented. I can be in a rented premise for last 10 years. So I'm currently where I'm staying here for last almost 2 years. No, rent default is a different thing, Anand. Not rent default. Stability means whether I am continuing in this premise for a long time. Another thing, whether I'm changing my house very frequently. So at every 6 months, I'm changing my house. Every 3 months, I am changing my house. There are people like this, especially who are defaulters. Every 3 months, 4 months, 6 months, they change their house. They change their office. And they mostly stays on rent. Now, when I talk about residence proof, you might have seen in the credit policy, if somebody is staying in their own residence, the minimum stability has to be 6 months. And if somebody is staying on rent, minimum stability has to be 1 year. That's a normal generic stability proof for a rented profile is 1 year. Now, when I talk about 1 year residence stability in a rented premises, what kind of proof supports that stability? What kind of proof supports that stability? That yes, I am being a tenant, I'm staying here for last 1 year. Electricity bill is the current one. Current one only. So registered rent agreement, one. Second is Electricity bill in a rented premises will not be in my name. Rent receipts can be forged. Correct. Gas bill, not electricity bill. So what happens normally? It depends again on city to city. If you are getting LPG cylinder, which is in your name, then obviously you can check the book and you can see for how long he has been taking gas in this residence, or you can check a receipt which is 1 year back, whether the same address is being mentioned or not, right? Yeah, that is fine. In the name of spouse is okay. But point is that if you are staying in a city like Mumbai, then most of the places have this pipeline gas where the gas bill will not come in your name. It will come in the name of your landlord. In that case, you won't be able to justify gas bill as a stability proof. Okay, but only if it is LPG cylinder and you are the owner of the connection or your spouse is the owner of the connection, you can get a bill which is say 12 months old and the same address is getting reflected along with the rent agreement. It makes sense, justified. Now, when we talk about the rent agreement, again, there are two kinds of rent agreement. One is notarized, another is registered. So if you are staying in Mumbai, normally it is notarized agreement. Sorry, normally it is registered agreement, not notarized. If you are staying in a city like Kolkata, or you are staying in a city like Bangalore, probably it is notarized agreement. That's it. So registered agreement, even it is much more stable, shows more stability, right? So that's how it is. Second thing, important thing is receipt of documents like balance sheet, KYC, gas receipt, bank balance, stability, right? Now, when I talk about the bank balance or the bank statement, what are the things generally I look at? In a bank statement, what are the things we look at? Achha, in Karnataka, actually I think rent agreements they are not registered, they are notarized. So I don't know why they are not taking. But in Mumbai, people, NBFCs are very much accepting, because then what kind of documents they are taking in Karnataka? Yashwant, what kind of documents they are accepting in Karnataka? Okay, fair enough. The next question is bank balance, Aadhaar. Okay, but if I am rented, I will not prefer to change my Aadhaar address, because I might go to a different house, I might get transferred, then again I have to change it. Correct. So Arun, what you have said is correct. When I talk about bank statement, if he is a salaried person, that the first thing which I will note is the salary getting credited or not. Okay. So if the salary is getting credited and it is uniformly getting credited, then obviously I can say that great, he is having stability in this job. Now, all of a sudden, see in the last 12 months bank statement you got, and you have seen salary is coming from 3 different companies at 3 different point of time. So for initial 4 months, salary was getting credited from company A. Then in the next 4 months, salary is getting credited from company B. And in the last 4 months, salary is getting credited from company C. What do you understand from this? Yeah, no check bounce. I'm coming to that point. I'll come to that point in no check bounce. Correct. Changing job frequently, which is again not a good sign. So I will show you a typical bank statement analysis once, guys. What are the things generally a credit guys look at right now? I'm sharing my screen. Is it visible? So this is an this is a bank statement analysis done in an automated OCR and then with an ML model, machine learning model, right? So where you just have to upload the PDF and you get the output. So let us have a look. What are the things generally we see or the machine sees? So one thing is the first thing is your account information, your account details, account number, PAN number, and the statement range, like from which date to which date the statement is given. Next is red flags. Red flags means suppose today's day's end balance is 20,100 rupees. So it's 20,100 rupees 0.43 paisa. This is the days end balance of today. Tomorrow, the opening balance is there is a mismatch. Tomorrow's day's beginning balance has to be similar to today's day's end balance, right? It cannot be different. So this is a red flag. So system, I told you that there are two ways. Either you do it manually or you do it by ML models. But concept is same. What exactly we want to see in the bank statement? So you can see there are two red flags. So mainly two red flags conditions. All the transactions which have raised with issues like balance mismatch during transaction validations. So this is a balance mismatch. And all cash withdrawal transaction above threshold limit of 1 lakh. So this is again something which you can set, or suppose you are doing a manual analysis of a bank statement. So you keep it in your mind that for a salaried customer or for a small business, the number I will keep a close eye on the transaction where there is a withdrawal of more than 1 lakh rupees. In the similar conditions or algorithm you can put in the machine learning model where you can put condition that throw a red flag where there is a withdrawal of more than 1 lakh. So these two can be red flags. One is this, which I have shown. Another is withdrawal, more than 1 lakh. So already there are some red flags which are raised. Balance mismatch for IDFC first account number this on this date for transaction amount of 6,000. So for an example, I have, this is my balance. There is a debit of 6,000. Ideally, my balance should come as this, whereas my balance is coming as, that means there is some manipulation. It cannot happen. So here at this point, there is a red flag. So which has been observed here. Against balance mismatch, the one which I have shown you guys here. So these are red flags which either you manually detect, and right now with the integration on bank statement analytics companies with a machine learning model, you get to know. Credit managers now don't need to do it manually. Machine will do it. Next is you check the debit and credit and net balance for different months. So here it has been shown in a graphical way. What is the debit balance, what is the credit balance, and what is the net balance? So this particular month, August 2019, how can it be as debit and credit are well matched in the bank statements? Where you are saying it is well matched? I didn't get your question, Yashwant. Can you come out clearly? Who said it has to be well matched? Your question is not clear. I'm not saying debit and credit needs to be well matched. So Yashwant, you are framing it correctly. I respect, but what exactly you are trying to say? When you are saying debit and credit, that is the thing. The reason for mismatch in the bank balance is when there is a forged bank statement coming to you. When a forged bank statement comes to you, that with mismatch, so this kind of mismatch, chances of mismatch are there in the forged bank statement. If a genuine bank statement comes, then there cannot be mismatch. That is what I'm trying to tell you. That means this bank statement was forged. Somebody is preparing this bank statement exactly in the format of a original bank statement. And honestly speaking, you will get this kind of bank statement a number of times if you are in credit underwriting. Similar thing you can get, Yashwant, in the balance sheet also. You can get forged balance sheet. So what we do normally, what do we check? It is not only the number of check bounces and number of salary credits and the incoming credits we check. We check a lot of things. That is the reason I have opened this to show you that what are the things we check manually and ideally we should check, which currently we don't even need to see manually, which the machine is doing for us. The next portion is, so this is just a difference between debit and credit. So the net is negative. So could be the balance is positive, but the net is negative because it's a difference between the debit and credit balance. Any doubt on this portion for the August 2019, that how can it be a negative in a savings or current account? Yeah, average balance, I'll come to that. You are right, very much right. So this is one part. Next portion is average balance. Now you can see here, day-wise average balance is calculated. So average balance for day 1, day 2, day 3, day 4, up to 31st day. Now what happens is, how this is calculated and why this is calculated. So I'm putting month here. So for an example, it's April, May, June, July, August, and September. And I'm putting date here, 1, 2, 3, 4, 5, and I will go up to 30, right? How this average balance is calculated is, so my balance is, say, on April 1st is 2000, May 1st is 2300, June 1st is 4000, July 1st is 5600, this is 8700, and this is 2100. Now, what is my average balance for first of the day for last 6 months is this, right? So this value comes here. Similar thing I am going to do for second, third, fourth, fifth, and up to the day of 30th. So what we used to do earlier is we generally used to take average balance for 4 days. Now the trend has changed with machine learning that average balance for every day we will check. Now tell me one thing, from an underwriter's or business point of view, why do we need to check average balance for every day? Or why do we even need to check average balance for 4 days in a month? Why do we need to do this? To the people who are into the credit underwriting. Why this average balance is needed? Okay. Next. Anything else? Yeah, to some extent correct. See, the correct answer is average balance is checked mainly to understand on which particular day you have maximum balance to suggest the customer their due date. So if I see on 5th of the day, my balance is highest. That means my cash available in the bank is mostly, much more on 5th. So if the customer is saying that keep my due date as first, as a business person, you can suggest him, sir, as per your bank statement analysis for the last 6 months trend shows, on 5th, you have got much more cash in your bank account. So it is safer to keep a due date of 5th because this shows your cycle of availability of bank balance, right? So this is one aspect of bank statement analysis. Second thing is aggregated balance. You can see an aggregated balance month-wise credit and debit balance, month-wise check returns, return inward, return outward with a reason, which you can do, high value credit transaction, high value debit transactions, and identified parties. So there are certain parties which can be related party transaction. So related party transaction means my wife is transferring money to my bank account to inflate the credit. So either you manually identify. Now, honestly speaking, for an individual salaried account or savings account, number of pages will be limited and the number of transactions will be limited. If it is a corporate, if it is a company, then for a single day, you can have 50 transactions, 50 pages transaction, single day, if it's such a big corporate. For a single day, you can have 50 pages for all the transactions. It is absolutely not possible manually to find out those loopholes. Then actually you need something called machine learning, where the machine will work for you, right? So you identify there are certain transactions which are happening to or from the group companies. So either it is coming from the group companies or fund is being diverted to the group companies. Similar thing, if you are looking at the bank statement of an individual, you can see what are the credit and debit transactions happening to the related parties, right? So these are the things which we generally see when we talk about bank statement, right? Any doubt till here? or you can come with your opinion. Yeah, that is true. There are a lot of small amount UPI transaction. Pre-sanction visit by the credit person, credit officer. Now, this is something which is field investigation. You call it FI, which is very much needed, or a personal discussion. Right now, tell me, what are the things normally you look at when you do a personal discussion? Say, for an example, where a credit person needs to visit a customer. Suppose you are giving a loan. Say you are giving an auto loan. When you get into a personal discussion, normally what are the things you look at and what are the things you ask from the customer? Say income proof ITS is already submitted. That is okay, fair enough. But PD questions, that is personal discussion questions, should be different. And your observation should be different. So what do you ask? Correct. Loan purpose, very good. Next. Reason for loan, bank balance for EMI, how much expense. Very good. Very good. Very good, Abhijit. So these are the typical questions. What else? Background of the customer. So I will say my background is very good. Margin money and source of margin money. Yes, very good. Cross check what the customer is saying versus the loan application. Correct. So one is source of margin money. If he is taking something, understand whether he is the other obligation. Yes, correct. Other obligation which is not even coming in the bureau. So he has taken loan from his friends and relatives which is not coming in the bureau. Whether he is repaying or not. Understand his cash flow, inflow and outflow both. Very good. Chit fund investment, yes. Money lender loans, very good. So you get to know even from the neighbors whether he has taken money from money lenders or not. As they do not appear in CIBIL, correct? They don't appear in CIBIL, right? Family income true, and who are the earning members? How many members in a family? So all of a sudden you say that, see that there are 15 members in a family and they are staying in 2 rooms. So that means obviously other income, yes, rental, agriculture, very good. So Yashwant, other income is also very important, which you have correctly said. So suppose you can add up those income, rental income, to show that the customer is available. You have correctly written. So this, knowing this is very important. Similarly, other expense is also something which needs to be considered. So which is again not coming. So other income, now point is, suppose my other income, I have a rental business. And now my apartment is lying vacant for last 6 months, but I have to incur expenses for the maintenance. So there is no rental income, but expense is there, which I am compensating from my existing income. So that is something, a kind of liability which is coming on me, but actually I'm not getting any rental income. Yeah, past credit history is something which you can look at the bureau. But yes, the reason for the past credit history you can ask to the customer. Suppose I can see around 10 inquiries for last 1 month in the bureau score. I can ask the customer what these inquiries are for. See, this is one observation. Say for last 1 month, there are 10 inquiries of around 5 lakhs. What do you understand? The customer has come to you for a loan of 5 lakhs for a car. And there are 10 inquiries which are getting in his bureau in the last 30 days. What do you understand? Correct. His application is getting rejected. The other option is, suppose he is into the rental business of car rental business. So I'll show you one thing, because that's quite interesting. I'll show you something which is slightly. So I'm into car rental business. I have 10 cars, right? Car 1, 1, so 2, 3, 4, 2, 3, 4, 5, 6, 7, 8, 9, and 10. Right? So for this, out of which 8 are in finance, and I am paying EMI of 10,000 each for 8 cars. So my monthly EMI liability is 80,000. Based on this, and say my income is 2 lakh per month. Right? My income is 2 lakh per month. Against 2 lakh, I pay a monthly installment of 80,000. Now the customer has come to you for getting finance for 2 additional cars. So what he is going to do, he is going to add 2 more vehicles in his fleet. So you calculate that there could be additional 20,000 burden. Now you see against 2 lakhs, obviously, since he is into rental business, his income will also increase. Additional 20,000 is getting added. But actually, if you see, especially in commercial cases where there is commercial vehicle customers or these car rental customers, they come with 10 inquiries from different banks. He has already taken 5 more cars in last 30 days. So his actual liability has increased by 50,000, which he is not even disclosing to you. Yeah, looking for best rate could be, but for best rate, he doesn't need to go and get his CIBIL check. The first thing which they ask is, what is your rate of interest? When he is checking CIBIL means he is submitting all his documents. So, you know, right now, it's not that immediately CIBIL will get checked. You have to log in, you have to give your documents, and then only CIBIL will get checked. Because CIBIL is a cost for the company. At every CIBIL, company is charged with X amount. So there could be two options. Either his applications have been rejected by 10 companies. Second, he has already taken more number of assets and his liability has increased, which he is not even disclosing to you. This could be two possibilities. There could be two possibilities, right? So these are the things. Now, once you see a lot of inquiries in this bureau, you ask him, or you get to know from his neighbors. That is the reason the VFI is done, that whether he has recently taken any car or not. Next is check RBI defaulter list, CIBIL check, Positex, ITR. Yeah. So CIBIL is most common bureau platform for India. Most of the companies, they do check CIBIL. So when I talk about CIBIL, normally, so let's show you one. Normally, CIBIL score runs from 300 to 900. So something around 750 is good. Yeah, CRIF gives, but every company doesn't use CRIF. Some of the companies, they definitely use CRIF, and some company use both CIBIL and CRIF. There are companies, CRIF gives detailed data, absolutely right. CRIF's data is quite elaborate, much more elaborate compared to CIBIL. But still now in India, many companies, most of the companies, they resort to CIBIL for understanding the past credit history of the customer, right? So there could be multiple things which you check in CIBIL, like one is your score, second is number of live accounts, third is what is the portion of secured to unsecured loans. Say I have 5 accounts and 5 are unsecured, credit cards and PL. So which is a caution. Why do I need 3 credit cards, right? Next is how many, like what are the DPDs in the running accounts, whether any account is reported as an SMA or not, whether there is any write-off or not, and what are the number of inquiries in recent. These are the typical things we see. Then the next process is we prepare CAM. Either you prepare it manually, currently with your system like LOS, normally they generate CAM. And then prepare the financial data. Now, when we talk about financial data, yesterday we had done a lot of brainstorming on the typical ratios and financial analysis. Yeah, DSCR is a part of financial analysis, obviously. So we discussed that when we talk about a term loan, we obviously do take care of DSCR. But when it is revolving facility, generally the interest serving capacity is something which we look at. Then assessment of the entire proposal of average bank balance, gross income. So average balance, which I have shown you just now, is definitely a very important feature which needs to be taken care of. Then sanction or approval of proposal by concerned authority. Then the next step is, if I am a junior underwriter, I have to recommend it. If it is coming within my authority, I can sanction or approve it. And then it goes to post-sanction stage. One second, guys. Yeah, sorry. So then what happens once the case is approved, that is sanctioned, then the next step is post-sanction document. So we have to submit post-sanction document. So obviously, like your agreement, your security PDC, ECS mandate, okay, all these things we have to do. And then the next step is disbursement of loan. And last but not the least is post-sanction activities such as bank account review. So when I talk about bank account review, there are testing like back testing. So have you heard about this term back testing? Back testing, what it is all about. So can you throw some load? Okay, good one. But what kind of historical data? So investments, yes, definitely it happens, but even loans also backtesting takes place. No, it happens in loan also. So here we are not talking about the models, whether the model is working correctly or not. Yes, in one aspect, we can talk about the model. If you have done underwriting through a model, say, I have developed a credit risk model based on logistic regression, and I have disbursed around thousands of cases. And then I pick up a sample of all these disbursed cases and find out the default, where my probability of default was showing 2%, but my actual default is 20%. What do you see? Is the model working correctly? I had used all this regression concept, everything, right? But my model is not working correctly. I had considered numerical variable, categorical variable, everything, put it into a model. It gave me false positive. Yes, it gave me false positive. And in a simpler manner, what do we do? Say you have a set of around 100 customers. So even if I put it in a very simple language, I'm not using jargons of statistics or anything like related to analytics. Sorry. Then there are 100 of cases which I have in my portfolio. Out of 100 cases, we pick up, say, 5 delinquent cases. 5 cases which are delinquent. Then I deep dive and do an analysis that why this case is delinquent. What exactly went wrong? What went wrong? Many companies, they publish this report on a monthly basis. So typically after the month end, when the credit managers are slightly relaxed in terms of number of files and disbursement, then they pick up a sample of delinquent cases, and then they even visit those customers, understand the reason why delinquency is there. This is also called back testing, not the model testing, but in a much more simpler manner. But yes, the purpose is same, to understand what went wrong. Now, there could be multiple findings. One finding is stop up income. Next is income fluctuation. Second is sector issue. If it is a machine or an asset, suppose you have funded a commercial vehicle, could be asset issue. Could be service issue from the dealer. What else? Business model issue. Okay. Excess leverage, which was not identified. Weather issues, especially in case of equipments, construction equipments. Okay. Even in crop loan also, it is applicable weather issues too. Yeah, so borrower has taken loans is similar to excess leverage. This excess leverage, we have considered this. What else could be the reason? Health factor, very good. What else? Fraud, country risk, very good. So what happens, suppose you have funded to an exporter and he has exported it to a country where there is a country risk. There is some political issue in that country, and that country, that particular customer who is residing in, might be he's supplied something in Israel and there is a political turmoil. The customer has not paid him money. That could be one thing. Second thing is a fraud, which is either the customer is doing or the customer's customer is doing. So that could be another issue. What could be another issue? What could be something internal? What could be something internal? Miscommitment. Management dispute is for the customer. That's true. Management dispute. Collateral risk. Right. Collateral risk mostly comes when you repossess the asset and you are not able to sell it properly. At that point of time, you get collateral risk. Still, I'm considering not an issue. When I talk about miscommitment, means the client was committed that he will be given a 36-month tenure. But the sales manager, or due to operational error, the tenure has become 24 months and the EMI has increased. This can be one miscommitment. Second miscommitment could be the client was committed X percentage of interest, whereas the interest which is actually levied is X plus N percentage. And so the client has already raised a complaint with banking RBI ombudsman, and there is a dispute going on, and he has stopped paying EMI, which is a genuine issue. The client was committed a moratorium of 2 months, whereas the actual moratorium was given as 30 days. There is a dispute. You will find anti-delinquency because the client is having an opinion that, okay, my first EMI will come after 2 months, whereas the first EMI got hit after 30 days. That's a miscommitment. That's a quite important feature which used to happen earlier. Right now, what is being done is there is a call center executive who calls up the customer before disbursing the loan. Sir, this is your loan amount, this is your EMI, this is your rate of interest, and this is going to be your first due date. This process has been started only because of this kind of issues which were cropping up. right? So these are the type of back testing you do and see why your portfolio has gone wrong. And then you can put the entire portfolio in the stress test and see how much percentage has portfolio has gone wrong and what are the corrective actions you can take. And based on the existing scenario, you can probably change your loss given default. You can change your model. You can do necessary changes in your model. Your credit policy can be made much more stringent. So these are typically 5 C's of credit. This is very common to all of us. One is capacity, capital, collateral, conditions, and character. So you all know that character means behavior based on your past credit history. Financial stability, capacity means what is my income, whether my income is sufficient enough to pay the EMI or not. Next is your own money you are investing. Capital. So capital becomes very vital in any credit underwriting. So how much capital? So you are getting into a project funding. Say you are funding a construction equipment or you are funding a real estate project. You would love to see how much capital exactly the promoters are infusing and what is the source of capital, right? Now, when you talk about source of capital, what exactly you see? This is my question to everyone and especially to the credit underwriters. When we talk about source of capital, what exactly we look at? Yes, this is one thing, equity in business, PE versus promoter. Next. That's true, Bharat. Next. Is it financed capital? Yes. Right, Yashwant. Absolutely true. Might be he has borrowed his capital from somebody. True. I might have gone to my friend, give me 25 lakhs. I will show it as my equity. Yes, that's a very important point, Yashwant. Money laundering. That is something I wanted to hear. Money laundering. Yeah, offshore funding, yes, Praveen. Money laundering is something. Whether my fund is from a proper legal method or I am getting the fund doing some unethical or illegal activities and which I am trying to show it as an equity in my business. This is extremely important and there are a lot of articles which are available in the open forum on anti-money laundering. Extremely, extremely important. On anti-money laundering. So that is something which is very important. So for which you want to know the source of capital. Next is collateral. Why it is important to understand the value of collateral? Why it is important to understand the value of collateral? I'll share my screen. I'll show you something important. In case of default recovery, skin in the game. Okay. So in this aspect, I'd like to show you something very important and quite interesting. This is a typical collateral gap analysis, where you compare the value of your collateral based on depreciation grade with the principal outstanding at different point of time. So at the initial point of time, screen is visible, right? Everybody can see, right? So what do you understand from this? Just let me ask you a question before I explain it to you. What do you understand by this collateral gap analysis? See, please look at the figure and understand what is meant by collateral gap analysis and what do you understand from this figure. So do not get into loss ratio and all this stuff. Just understand what exactly it is trying to show you. See what is written here. Yes, we need to have collateral more than the loan amount. So at any point of time, when you are funding an asset, your principal outstanding will be more than your asset value. Because the moment, say you are funding a commercial vehicle or you are funding a car even, the moment the car is out of the showroom, it is 20 to 25% is depreciated because it is out of the showroom. You check it. Yesterday, tomorrow, today you buy a car, tomorrow you want to sell it, go and sell it, you will get a lesser price. But your loan amount is more than that. So what happens? Your principal outstanding is written off slowly and gradually. And at ninth month, you are getting a positive collateral gap. So at ninth month onwards, if you repossess and sell the vehicle, then only you will be profitable, subject to recovery of the principal and writing down of your principal outstanding. Only when your principal outstanding rights is depleted, and when it gets depleted, only when you are recovering the money from the customer. This is the scenario. From this stage onwards, you get a positive collateral gap, right? So that is the reason for which there is a depreciation grade. In India, only few companies use this, but this is a quite useful thing. It should be used, especially when you are going for secured lending and asset-based financing, a complete collateral gap analysis. So that is the reason we talk about LTV. Why do we go for LTV like 70%, 80%? And we do not prefer an LTV of 100%? Because if it goes for a default, then there will be a loss even in case I repossess and sell it. Yeah, in wholesale and commercial banking, it happens. So we cannot help it. Even in PSU banks, I have seen after repossession, the entire asset price is kept, say, around 30 lakhs. When the party has visited, an actual valuation is done in an unbiased manner, that came to something around 10 to 12 lakhs. That means there was case of overfunding. That keeps on happening, especially in PSU bank. Even today it is happening. Yes, Bharat, you are right. Yes, I agree. Okay. So till now it's clear, I guess. How is the session going? Is it good? So these are 5 C's of credit slightly explained in a property type. We all know collateral could be property type, location, and marketability. So when I assess a collateral, especially in terms of property type is understood, location is understood, location and marketability. Can somebody throw a bit of light what is meant by location and marketability? Bharat, Equalify will upload these PPTs in the site. So please get in touch with them. So what do we mean by marketability? How easily can I sell? Correct. Now, I have seen many cases which has come that a property is made in a village, in a rural area, where the average property price is around 25 to 30 lakhs, or in a very small city. And somebody who has constructed a house spending 1 CR, the valuation of the house is 1 CR, he wants to get a LAP, loan against property, right? Now, yes, I have a solid collateral. I am getting a proper collateral of 1 CR and I have to give him a loan of 70 lakhs, 70% LTV, very good. But the average price of a property in the locality is 25 to 30 lakhs means most of the people in that locality cannot afford a property which is more than this average price. So tomorrow, if I want to repossess the property in case of default, I will have to recover 70 lakhs or 60 lakhs. There will be no buyer. There will be no buyer. So that's why location and marketability is very important. If you are funding a property in Mumbai for 2 CR, a flat of 2 CR, depending on the location, it can be easily sold. Today, even in Virar, you will get a flat at 70, 80 lakhs. Forget Kandivali. In Kandivali, something around 1.5 to 2 CR for a 2 BHK minimum. Same thing in Andheri, it could be 3 CR. And if you go to South Bombay, it is more. If you go to Vashi, it will be slightly lesser. But the same sized flat, say around 650 to 700 square feet flat, when it comes to selling in Kolkata, it will be nothing more than 30 to 35 lakhs. Even today. Only except certain societies. Yeah, it's true. It's true. Right? Next one is credit. When I talk about credit, I take care of either your Beacon score or CIBIL score or past credit history issues and risk with explanation. So you might get a case where there was DPD, there was write-off, but obviously that has to be justified. That yes, this is the reason for the write-off. Then it comes to capacity, where I see the ability to repay the loan, explain the debts, job stability and income. So credit rating, we are going to cover in the rating chapter. Credit rating obviously is an important part. So if you are specially underwriting a company which is rated by any of the credit rating company, ideally you should look at the credit rating and also read the rating rationale thoroughly. And also, if you see in any credit rating rationale, their analyst number is given. If you want, you can call them in case you need any clarity of that. Most welcome. Okay. Capital means down payment. We have talked about down payment and down payment source and available cost. Character is willingness to repay the loan, integrity and stability of income. Guys, just give me 1 minute. So these are the typical. So, acha, one thing I must check before bureau score. What do we do is dedupe. So dedupe can be two things. One is internal and another is external. When we talk about external dedupe, it is basically the bureau score. Now, what is internal dedupe? A very common word who is into the lending business. What is internal dedupe? Even who is into the CASA, deduping is done for CASA. From your institution or not. When we talk about internal dedupe, you see whether the customer has taken any loan from your institution or not. Yes, different product, same company. Multiple customer ID generally doesn't happen. Multiple loan accounts can happen. Customer ID is single. Even for bank, customer ID is single. Customer is the same borrower, could be different product or for the same product, but the bank is same. Okay. So these are the credit bureaus. These are the credit bureaus which are operational. CIBIL is there, Experian is there, Equifax is there, CRIF is there. Normally, CIBIL is something which most of the companies still now. Yes, Yashwant. So this is the CIBIL report, typically CIBIL report format, which I have shown you. Now, I would like to ask you one question. What do you understand by -1 score? A score of -1. Right. Right. So when you get a case who has come to avail funding, who has a score of -1, how do you go ahead? He doesn't have any credit history. Bharat, -1 is not here, but in the score, this is the score range. If you have seen CIBIL report, then you might get a case for the first time borrower as -1. Okay, what are the other parameters you will consider? Yes, I'm definitely -1 means he doesn't have taken any loan. So when someone is having a score of -1, that means he or she has never taken a loan. That's why it is coming as -1. Now, when we talk about collateral analysis, cash flow analysis, those are available for a big shot company where there is a collateral. Now, have you guys must have how many of you are using lazy pay? I'm sure many of you are using lazy pay. So lazy pay is a BNPL. It is buy now, pay later. Buy now, pay later. It is called BNPL. Right? It's not P2P lending. It's buy now, pay later. Now, somebody from the payment system who is working with the payment system company can tell me whether lazy pay extracts your bureau report or not. Yeah, Amazon Pay. Good. Do they extract your bureau? No, Bharat. They don't. They don't. You get your lazy pay limit on your phone number. So they resort to something called alternate data. Yes, I'm telling you, alternate data. This alternate data, there are many companies who provides alternate data. And by alternate data, we mean, is your mobile's number postpaid or prepaid? So I'm not talking about Flipkart, but I'm talking exclusively for lazy pay. They don't check your CIBIL. And how entire BNPL companies operate is they check your mobile usage pattern and your bill payment pattern, based on which they start with small amount of limit, say 1,000 rupees. Then they see how you repay that 1,000 rupees. You avail that 1,000 and repay, avail and repay, avail and repay. Then slowly and gradually they enhance your limit, and that would be up to 10,000, 20,000. It can go to not more than 1 lakh, right? This is how they operate. But if somebody defaults, then obviously that is shared with bureau. Generally, they don't check bureau. So when you are getting a score of -1, generally you resort to alternate data. Phone, payment, utility payment, other things are definitely there. And in India, correctly, there are n number of companies who provides you with alternate data. Right? This is a typical Experian format. Yeah, Yashwant. High credit in the sense, high rate of interest, you are saying. Actually, BNPL doesn't charge any rate of interest. BNPL charges penalty only if you do not, what do you say, do not make payment on the due date. So there is a typical earning model for BNPL. So I have it. One sec. Still, let me, if I get it, I can show it to you. Yeah. My screen is visible, right? This is the overall BNPL settlement process. This is typical revenue model of BNPL. So this, if you carefully observe, you understand how a BNPL company makes money. They don't make money out of interest. They take a percentage of sales from the merchant, which is their major source of income. And this borrowing cost, what you can see, is the borrowing cost for BNPL company. That is not the borrowing cost of the customer. And interest is calculated like this on a day-wise basis. Yeah, sure. I'll share it, Bharat. Don't worry. Okay. Can I go to the next topic? Next one. Let's go back to the PPT. So this is your typical experience score, Equifax score, Equifax report format. This is a CRIF report format. So CRIF report, you can see, similar to CIBIL, they have the account details and what is the code. So if it is SUB means it is substandard. If it is STD means standard. If it is DVT means it is doubtful, that is a delinquent account. SMA is special mentioned account. Why NPA is 0? Okay, let me open it once again. So NPA is 0 because there was no NPA. That's why they didn't have to incur. Had there been an NPA, then obviously there would be NPA 0. Then there would have, had there been any NPA, then probably that number would have been mentioned. In this case, it was not an NPA. This is for a single account. This is for a single account. There was a limit sanction for 5,000. Understood, Yashwant? Actually, Bharat, we will deviate from this. If you want a session on BNPL, you can talk to Equalify. We can have a session on BNPL. BNPL is a different topic at all, altogether. So we'll really deviate from this. If you really want a session on BNPL, please have a word with Equalify. I can give you a session on BNPL. I don't have any problem. Because we have to complete all these things by this session by 10 o'clock. And then we have another session from 10:30. You can have a word with Equalify. Yeah, okay. So this is the typical CIBIL score comparing ranges. So you are having good score if your score is between 650 to 750. If you are above 750, then it's excellent. Now, what makes your credit score? One is my capacity. Next is accumulation of debt for 12 to 18 months, number of inquiries and opening dates. Next is mix of credit. Now, when I talk about mix of credit, what do you understand by mix of credit? So, yeah, Yashwant, this is a good question. Why do most banks resort to CIBIL and not to others? Because most of the banks, they have been following CIBIL from the very beginning, and the other credit bureaus, they have made entry slightly late. So, and CIBIL is slightly easier to understand what they believe. It's again a mind block. That's why. Slightly easy to understand CIBIL report as per many credit managers. Not for me. Okay, now when I talk about mix of credit, what do you understand by mix of credit? No, Abhijit, no. This is not mix of credit. That's not mix of credit. Different loans means, what is meant by different loans? So when I talk about mix of credit, it means secured versus unsecured. Secured versus unsecured. This is what I mean by mix of credit. Like how many secured loans I have in terms of home loans, auto loans, and how many unsecured facilities I have, like credit card, personal loan, and all. Right? So, what if my entire loan portfolio is having 70% of unsecured loan and 30% of secured loan? This is unsecured and this is secured. What do you understand from this? I have 70% unsecured loan and 30% secured loan. What is mean by this? High risk, correct? High risk. Why do I need? No, not necessarily. I might not be highly leveraged. When I talk about highly leveraged, it means my entire loan liability per month is quite high compared to my income. I might not be highly leveraged, but yes, definitely my credit mix is not that great. A secured loan is cheaper, that's true. But then when I have 5 credit cards and 3 personal loans and only 1 auto loans, what does it mean? Do I really need 5 credit cards? That is something which I need to understand. As a credit person, you need to understand. Do I really need 5 credit cards? And if yes, then why? There can be a situation. Now think it in a reverse way. There can be a situation that where I use my credit card to purchase stock for my business. If that is the case, then it is okay. Then also we will suggest that why are you going for credit card since your business is scaling up? Why don't you take a uh, revolving facility? Yes, Bharat, please tell me what doubt you have. Yeah, it is definitely wrong to have more credit cards if you are using those credit cards on personal spending. Why to have one credit card is sufficient? That's okay. If fair enough, you can choose, but so it is a personal choice again. I say, but from the credit angle, actually, you need maximum 2 credit cards, max 2 credit cards. That's it. So if you are an international traveler, probably you would like to have a card which is accepted globally, though Visa and Master is almost accepted globally nowadays, and probably one card which is okay for India. So like in this regard, I'd like to tell you that I had a Dynas card. So Dynas card was mainly Dynex and Amex uh, is more popular for the international travelers. So it used to happen. Why I have literally, taken out from my credit card kitty is reason being Dynas card. Dynas card is having problem with many POS. In many POS, I used to find that the Dynas card is not being read. Their number is slightly different. They don't accept Dynas card. The machines are not able to read Dynas card. That used to throw error. Then parallelly, I had a card which is not a Dynas, but a normal Visa card. Then what I did, I used to use that card. Okay, Bharat is asking, I don't want my score to go down just because I have more cards. So you can have more cards, but don't use it unless it is needed. If you are, what do you say? Like you go to a shop and you purchase things which you don't even need it with your credit card, then there is a problem. I just step into, Vijay Sales or Reliance Digital, I immediately get an iPad. I don't need an iPad. But then also I got, because I have a credit card in my pocket, then that's a problem. That is totally up to you, how judiciously you will spend through your credit card. It won't affect, but then again, it will affect your credit rates. If you have too much of unsecured loan compared to the secured loan, it is definitely a trigger for the credit manager. Okay. This is very, very important. We have very limited time. Let's quickly wrap up, guys. Fixed obligation to income ratio. right? So this is very, very important, and we can have a quick brainstorming session on this. Is suppose my salary is 55,000, right? My HL home loan EMI is 10,000. My car loan EMI is, say, 7,500. So my FOIR is, that is fixed obligation to income ratio, is my existing EMI is 7,500 plus 10,000 divided by 55,000. So my FOIR is 31%. So up to 40%. Some banks they do expect a FOIR of 40%. Some bank accepts a FOIR up to 50%. So up to 40-45% FOIR is okay. Now suppose this guy has come to you to take another home loan of 10,000 EMI. Now what is going to be my FOIR? My FOIR will decrease. Sorry, increase. Now it has become 50%. My FOIR is increased. So this typical FOIR is calculated both in personal loan and home loans, even car loans. So you check your FOIR. What is DSCR? So FOIR is to some extent similar to DSCR, but not DSCR, applicable to mainly home loan, even credit card, home loan, and personal loan, auto loans, where there is a fixed EMI. Any kind of term loans. 70% for secured loans, FOIR is very high. I would say it's quite risky. So you can, I don't know, if you are into sales, then probably you would recommend that. I will not recommend that, because out of my salary, I need to, I have certain living expenses. I have to pay the rent. Okay, and if I'm not staying in my own house, which is funded, I have some household expenses. I have to pay my daughter's school fees. I have many expenses like medical expenses. I have my insurance bills to be paid. I have certain insurance policies to be paid. I have my, mutual funds. So these are all my expenses, which will be nothing less than 40 to 50%. No, ideally not. When you talk about FOIR, so you take care of the EMIs, which should not go beyond 45 to 50%. Yes, sir, you are getting home loans disbursed. That is, understand. I know all the banks have targeted. Recently, if you have seen the HDFC Bank's video, which got viral, where because of the target, the branch managers were scolded like anything. So this happens, I understand. But from the credit and risk point of view, I do not support 70% of FOIR. No, it won't, Farad. It won't include rent expenses. That comes under your living expenses. Okay. So this is a single customer view for the bank statement. There's a horizontal analysis and vertical analysis of the financials. This is a typical income statement of a company. Yes, it takes gross salary, pre-tax. This is GSTR. GSTR is important to see your sales and income. So input tax return. Input tax return we discussed yesterday also, that what is my purchase and how do I see my purchase and how do I tally it with income tax return. And these are the typical type of GSTRs which are there, and what is the filing frequency and what is the purpose for that. Who files what GSTR, which GSTR is filed by whom, and what is the filing frequency. This is a typical IT return, and who files which IT return is there. So you will get to see all these things once this PPT is uploaded. Okay, now we'll quickly do a small FOIR calculation. Okay, so now let us quickly do a FOIR calculation. So my salary is 1,10,000. My HL EMI is 30,000. My car EMI is 15,000. Manufacturer example, in the sense you will talk about DSCR. I am talking about FOIR, Yashwant. I'm talking about FOIR. I'm not talking about DSCR. When you talk about manufacturer, then the entire profit and loss and balance sheet comes into the picture, where you look see DSCR, that is debt service coverage ratio, right? And I have my PL of 20,000. I have another PL which is again 25,000. Now calculate the FOIR here. What is my FOIR? Quickly calculate. So 81.8%. I don't know why did you get 86%. People are getting 81.8%. So let me calculate and see what is the percentage. So let me calculate the sum of EMIs. Sum of all EMIs. That comes to 90,000. And then my total EMI divided by my total gross salary. It comes to 81.8%. No, Akhila, it is 81.8%. Considering all the EMIs. Yes, it is extremely high. It is extremely high. But here is a but. I have a rental income per month of 50,000. And there is some maintenance cost of the property, that is 10,000. Now you calculate the FOIR. Now you calculate the FOIR. So this rental income is apart from my normal income. $60, is it? Let us check. So this is my total income, right? And my EMI liability is 90,000. So my 90,000 divided by, it is 56.25, right? But here also, we can be slightly more conservative. Why I can be slightly more conservative is, I do not consider 50,000 as my rental income. Rather, I consider my net of rental income is 50 minus 10. That is 40,000. Sorry, guys. So if it is 40,000, then obviously, instead of I2, I will write I4. Then I get a FOIR of 60%. So if you are becoming, yes, Chandrasekhar, that's what I'm doing. I have taken net of rental, that is 40,000. So I've reduced the maintenance. Now I'm getting a FOIR of 60%. Now tell me whether you will fund this customer or not. Now, guys, you tell me whether you will fund this customer or not. Yes, because again, 60% is too high. Now, for an example, I have an agricultural income of 5 lakhs per year, right? Now, for an example, I have agricultural income of 5 lakhs per year. That means this divided by 12 equals to 41 plus 41,666. Now, in this case, I am adding up this. Now, whether you will find a yeah, tax needs to be calculated, but it is not calculated. Tax is not considered. If you start calculating tax, yeah, still it is higher. Still 46% is higher. Still it is higher. But then again, banks are becoming aggressive. Now, instead of 5 lakhs, if I mention it as 10 lakhs, then it is becoming 38%. Sometime you may not earn it. It is a seasonal income, but then again, you have to do business also, Bharat. So you cannot be too much pro risk. We have to keep a, yes, agri income is obviously, how do we fund crop loan? 30 to 40% post funding is agreeable. So when we talk about FOIR, ideally it depends on income to income also, it changes. So I have a salary of 10,000. My livelihood income will be 8,000 minimum. Whereas I have a salary of 50,000, my livelihood income, so then I will have certain residual income to spend for some other things. Yeah, that is something else. Definitely, Farad. You can check whether he has crop insurance or not, or you can see for last few years whether the income was uniform or not. That is okay. So I am talking from the FOIR part only. Right? It is true. Tax incidence is necessary, but generally, if you see, you can ask any banker, they do consider gross salary. There are some companies who takes net salary also. So ideally, you are correct. Ideally, we should take net salary as a consideration. Net salary, what is my take-home salary after tax deduction? Now tell me one situation. If I have given wrong declaration and my tax deduction is 0, at the end of the year, the entire tax for the entire year gets debited from my salary, gets deducted in only 2 months. Yes, HDFC does calculations on gross basis. That's not so. That's totally, that is actually the ideal situation. Ideally, we should take net salary, and we should also see that in the salary slip whether tax is getting deducted or not. Because there could be a situation where the last 3 months the customer raises his hand saying that there is tremendous tax deduction from my salary because I have not given a correct declaration. That is another situation which can happen. Okay. Chalo guys, we are good to go for the next session. Thank you so much. Thank you so much. How was the session, by the way? We'll reconnect at 10:30.